You know, if there's one lesson that's been beaten into me more times than I care to count, it's this. The market doesn't pay you for being active. It pays you for being right. And being right often means you've got to learn to do nothing. That's the hardest part. Do you see what I'm saying? Everyone wants to trade. Everyone wants action. But the market isn't a slot machine. It's a weighing machine. And it's a waiting game. You don't get paid for being early. You don't get paid for being late. You only get paid when you've got the setup and you've got the patience to wait for it. Now, why do most people fail at this business? Is it because they can't read a chart? No. Plenty of them know their lines and their bars. Is it because they don't have enough money? Not always. They fail because they cannot wait. They must have action like a man who must have cards in his hands. That itch for excitement, that craving for movement, it's poison in trading. Have you ever caught yourself staring at a chart and thinking, well, maybe I'll just put something on just to be in the game? That's the urge that empties accounts. When I started out, I was a boy in a bucket shop, watching tape tick by nickel by nickel. I thought the trick was in being clever, spotting every little wiggle and trading it. And sure, sometimes it worked, but most of the time it didn't. I'd win a little here, lose a little there, and by the end of the week I had nothing to show for all my effort. That's when I realized it's not the constant trading that makes the money. It's the sitting. It's waiting for the real play to show up. Doesn't that sound strange? That you make the most money not by trading, but by waiting? But it's true. Let me tell you, the market has a way of punishing impatience. If you chase, you pay. If you guess, you pay. If you force trades, you pay. But if you wait, if you sit with your hands in your pockets until the picture is clear, you'll be amazed how the odds tilt in your favor. The trick is believing that you don't need to be trading every day. Do you think the big money is made in constant skirmishes? No. The big money is made in the big moves. And big moves don't come every hour. They don't even come every day. They come when conditions are ripe. And until then, you wait. Here's the thing about setups. They're like a train schedule. If you miss one, don't chase it down the tracks. Another one will come. But you've got to know what train you're waiting for and where it stops. Most traders don't even know their setups. They just jump on anything that moves. That's not trading. That's gambling. And gambling is a fine way to ruin yourself. You wouldn't walk into a casino and think you can beat the house by playing every hand, would you? Then why do it in the market? The best trades I ever made, the ones that paid for houses and cars and everything else, they didn't come from luck or hunches. They came from setups I knew, patterns I trusted, conditions that lined up, and until they lined up, I did nothing. That's the secret most won't accept. Waiting looks like doing nothing. But in truth, waiting is work. Waiting is discipline. Waiting is the trader's real craft. Can you sit there with a chart in front of you and do nothing? Can you hold back when your fingers are itching to click the button? That's the test. I used to think I had to catch every swing. Up, down, sideways. If there was a move, I had to be in it. And you know what that left me with? Commissions, mistakes, and a bruised ego. Then one day I caught myself. I realized I didn't need every swing. I just needed the fat part of the move. The big middle where the odds are clear, the momentum is there, and the setup is undeniable. That was a revelation. Do you understand what I mean? The market will always give you chances, but not all chances are equal. Some are noise, some are traps, but a few are golden, and you've got to train yourself to wait for the golden ones. Now, let's talk about charts. Charts are your map, your compass. They tell you where you are and where the market has been, but they won't whisper the future in your ear. That's where setups come in. A setup is nothing more than a condition, a signal, a set of circumstances that tilts the odds. Maybe it's a breakout above a range. Maybe it's a pullback to support. Maybe it's a volume surge that confirms strength. Whatever it is, you've got to know it like the back of your hand. Because if you don't, you'll see setups where none exist. Tell me, have you ever forced a pattern onto a chart just because you wanted to trade? That's the danger of impatience. You start to see what isn't there. And here's another truth. The market won't reward you for almost setups. Almost doesn't pay. It's either there or it isn't. When it isn't, you wait. That's what separates the professionals from the amateurs. The amateur needs a trade. The professional needs the right trade. Can you see the difference? I'll give you an example. In one campaign I ran, I waited weeks for the stock to form the right base. Every day it wiggled and teased, but it wasn't ready. The boys around me said, "You're missing moves." But I knew better. Then one day the volume swelled, the line broke, and the setup was perfect. I went in heavy. That one trade paid more than a dozen small ones could have, and I could have missed it if I had wasted myself chasing noise the week before. Doesn't that make you think about your own habits? Patience in trading is like capital in the bank. Every trade you don't take, every bad setup you skip, that's money saved. And money saved is money ready for the right play. The market will tempt you with half-formed patterns, with maybe and almost. But you've got to resist. Why? Because your job isn't to play every card. It's to play the winning ones. Do you sit down at a poker table and shove chips in on every hand? If you did, you'd be broke in an hour. The smart player folds more hands than he plays. It's the same in trading. Folding is part of the game. Now, I'll tell you something about wealth. Wealth in trading doesn't come from 100 trades a week. Wealth comes from compound profits, from stacking gains over time, from avoiding the big losses that set you back months. And what causes the big losses? Impatience. Impatience to force a trade when the market isn't giving. Impatience to double down on a losing idea. Impatience to chase a move after it's already run. Have you ever chased a stock after a big breakout thinking it's just getting started, only to watch it reverse and slap you in the face? That's impatience. That's lack of discipline. A trader's greatest asset isn't his brain or his chart or his system. It's his patience. Without patience, every other tool is worthless. You could have the best method in the world, but if you can't wait for your method's signals, you're sunk. That's the brutal truth. Think about the times you've lost money. Was it really because the market tricked you? Or was it because you didn't wait for your conditions? Most traders lose not because they don't know enough, but because they can't do nothing. They equate activity with progress. But in trading, it's the opposite. The less you do, the better you do, provided you only act when it matters. Can you believe that doing less makes you more? It's counter to everything the world teaches, but it's the truth in markets. So I tell you again, learn to wait for setups. Train your eye. Know your signals. Sit on your hands until that eye show, and when they do, act with conviction. That's trading. That's how you build. And don't misunderstand me, waiting doesn't mean laziness. Waiting means preparation. It means studying your charts, watching your levels, marking your conditions, and keeping yourself ready. Because when the setup comes, you can't hesitate. You can't be asleep. You've got to be ready to strike. Do you see the balance here? Too early, you're wrong. Too late, you're wrong. Right on time, you win. And the only way you catch that moment is by preparing while you wait. The truth is, trading is less about intelligence than it is about temperament. The market humbles the smartest men, but the patient man, the disciplined man, he lasts. Why? Because he can wait for his pitch. Like a batter who doesn't swing at every ball. He waits for the one in his zone. Then he swings hard. That's how you win. Are you swinging at every pitch, or are you waiting for your pitch? That's the question you've got to answer. I'll tell you, the market doesn't care about your opinion. It doesn't care about your need for action. It doesn't care about your hopes. It only cares about setups, about conditions, about probabilities. You can't bend it to your will. You can only align yourself with it. And alignment comes from waiting until it shows its hand. Now you may think waiting is boring, but let me tell you, there's nothing boring about catching a big move. There's nothing boring about watching a trade run in your favor while others are scratching their heads. That satisfaction, that profit, it comes only because you waited. Boredom is the price you pay for success. Can you endure boredom? Can you sit through quiet days without forcing action? If you can, you've got a chance in this game. If you can't, you're better off finding another line of work. I used to watch the crowd. The crowd loves excitement. They love the chatter, the tips, the action. But the crowd is usually wrong. Why? Because they're impatient. They can't sit still. They must always be doing. And that's why the crowd loses. If you want to win, you've got to learn to do the opposite. Stand apart, be patient, wait for your setups. Doesn't it make sense that if the majority loses, you've got to act differently than the majority? And remember, money is made in the big swings, the great campaigns. That's where wealth comes from. Not in scratching for pennies, not in scalping noise. The big money comes from identifying a real move and riding it. But to ride it, you must first wait for it. Most can't wait. They want the thrill now. They want the profit now. And so they missed the big moves because they were too busy chasing small ones. So I ask you, do you want excitement or do you want wealth? Do you want to be right? Because you can't have both. Trading for excitement is a losing game. Trading for setups is the winning game. And every day the market whispers tests in your ear. Here's a little move. Do you want it? Here's a false breakout. Will you chase it? Here's a setup that's almost ready. Will you jump the gun? And every day your discipline is tested. Do you fail those tests? Or do you pass them? That's what decides your future in this business. The hardest lesson of all is that you don't need to be active to be profitable. You don't need to be clever to be successful. You need only to be patient, disciplined, and ready. The setups will come. They always do. The question is, will you be there with money in hand and mind in control when they arrive? Or will you have wasted your capital and your confidence on impatience? That's the choice every trader faces every single day. When I say that folding weak hands preserves capital for the right opportunities, I mean it in the most practical, hard-learned way. This business is no different from a card table. The fool plays every hand because he thinks that to win he has to always be in the game. The wise man folds more than he plays because he knows the true test isn't in how many hands you enter, but in how many you avoid. Do you understand the difference? Trading is about survival first and profit second. And survival depends on your ability to protect your stake. Every dollar you put into a poor trade is a dollar you cannot use when the real trade shows up. Think about that. Isn't that the most overlooked truth in this game? You only have so much ammunition, and wasting it on weak setups is the fastest way to run yourself out of the war before the battle even starts. The market doesn't care how badly you want to be in a position. It only cares about probabilities. And probabilities don't favor the trader who insists on forcing weak hands. I've seen men trade like gamblers, throwing chips at every pot, convinced that somehow constant action would tilt the odds in their favor. But the market isn't a casino, and you're not playing against luck. You're trading against human emotion, crowd psychology, supply and demand. And when the setup isn't there, when the pattern isn't clean, when the odds aren't aligned, you've got to fold. Can you do that? Can you watch the chart move and resist the urge to chase it? That's the hardest thing for most. Preserving capital is more than just holding on to money. It's preserving your confidence, your clarity, your discipline. Every weak trade that ends in a loss eats away at your mental reserves. It doesn't just cost you dollars. It costs you patience. It makes you desperate to win it back. And desperation is the graveyard of traders. How many times have you thrown good money after bad just to make even? That spiral begins with one weak hand. You couldn't fold. I remember times when I had cash in my pocket and the tape looked tempting but not right. The old me would have taken the shot just to feel alive in the market. 9 times out of 10, it would cost me. The smarter me learned to step back. Better to sit in cash and look foolish than to sit in a losing position and feel trapped. Do you see the difference in power? Cash is power. A bad trade is weakness. Every time you fold, you strengthen your position. Every time you force, you weaken it. Most traders hate being on the sidelines. They think money must always be working. But in truth, cash is also a position. Sometimes the best position you can hold is none at all. When you fold the weak hands, you're holding cash. And that cash is ammunition. That's what keeps you alive long enough to take the strong setups when they appear. And when those strong setups come, you'll be glad you kept your powder dry. You can't catch every move, and you shouldn't want to. The market is full of noise, full of half moves, false starts, fake breakouts. If you try to chase them all, you'll bleed yourself dry. Folding weak hands means letting go of the need to be right all the time. It means admitting that not every opportunity is yours to take. Does that bruise your ego? It should. Trading isn't about ego. It's about discipline. I'll tell you something. The biggest trades I ever made, the ones that set me ahead, only came because I had the capital ready to seize them. And the only reason I had that capital ready was because I didn't waste it on weak opportunities before. Folding weak hands isn't about missing out. It's about staying prepared. How else do you expect to build wealth in this game? Do you think wealth comes from chasing scraps? No. Wealth comes from catching the real meat of the move. And you can't catch meat if you've starved yourself on scraps. It's tempting. To think a small loss doesn't matter, that a small mistake is harmless. But add them up one after another, and soon you've dug a hole you can't climb out of. Weak hands don't just cost money, they create habits. Every time you play a weak hand, you reinforce impatience. Every time you fold it, you reinforce discipline. Which habit do you want to build? Which habit do you think will make you richer over the years? Put it plainly, in trading, folding weak hands is the same as protecting your future. You don't know when the next big setup will arrive. Maybe tomorrow, maybe next week. But when it comes, you'll need money to act. If you've blown it on poor trades, you'll watch opportunity pass you by. How many times have you said, if only I had the capital now, I'd take this trade? That's the punishment of weak hands. That's the cost of impatience. And don't fool yourself into thinking you'll make it back easily. The market doesn't hand out second chances. When the right setup comes, it doesn't wait for you to rebuild your account. It rewards the man who is ready and leaves behind the one who wasted his stake. That's the brutal truth. Can you accept it? Think of the crowd. The crowd always wants in. The crowd can't fold. They chase, they hope, they cling, and the crowd usually loses. If you want to stand apart, you must act differently. You must fold when they play. You must sit when they run. You must wait when they rush. That's how you preserve capital. That's how you last. Every fold is a decision. Every fold says, this is not my hand, this is not my trade. That's power. That's control. The amateur thinks folding is weakness. The professional knows it's strength. Which one are you? I've sat for weeks, even months, without a trade. People said I was missing the action. But I wasn't missing anything. I was waiting for my hand, and when it came, I played it big. That's the difference between dabbling and trading. Dabblers nibble at weak hands and end up broke. Traders fold them, wait, and strike when the odds are right. Weak hands whisper, maybe this time. They look almost right, almost ready, but almost doesn't pay. Almost setups are how brokers get rich and traders go broke. Folding weak hands means understanding that almost is not enough. It's either right or it isn't. And if it isn't, your money stays in your pocket. Simple rule. Hardest to follow, preserving capital isn't glamorous. It doesn't feel exciting. Folding a weak hand won't make your pulse race, but it's the habit that separates those who last from those who burn out. Excitement is for gamblers. Wealth is for traders. And wealth is built on discipline, on patience, on folding the weak so you can seize the strong. This principle never changes. Markets change, technology changes, patterns shift, but preserving capital by folding weak hands is eternal. It worked in the past, and it will work decades from now, because it's not about charts or machines. It's about human nature. Human nature is impatient, greedy, fearful. Folding weak hands is the antidote. It's the edge you can always control. So the next time you see a chart that looks tempting but not perfect, what will you do? Will you fold or will you play? Will you preserve your capital or risk it on a weak hand? That decision, repeated again and again, is what makes or breaks you in this business. When I tell you that preparation during waiting is as important as execution during trading, I mean it literal. People think waiting is idleness, as if sitting outside the market is wasted time. But waiting done properly is the hardest work there is. Waiting is studying. It's sharpening your edge. It's conditioning your mind so that when the moment comes, you don't hesitate. Do you think a trader just wakes up, clicks buy or sell, and fortune falls into his lap? No. Fortune is built in the quiet hours when he is watching, recording, analyzing, preparing. There were days when I wouldn't make a single trade. To outsiders, it looked like nothing. Inside, it was work. I watched the tape. I marked charts. I studied how a stock acted when strong and when weak. By the time the setup lined up, I knew the stock like an old friend. I knew how it breathed. I knew how it reacted. That allowed me to act instantly without hesitation. Waiting must be active, not passive. Preparation gives you conviction. Without it, even the best setup feels uncertain. If you haven't done the work during waiting, if you haven't watched the levels, the ranges, the volume, when the move finally comes, you'll second-guess yourself. You'll hesitate. You'll doubt. You'll play small when you should play big. And hesitation costs money. But if you've prepared all along, the moment the signal fires, you're ready to strike. That's the edge. Many traders confuse patience with laziness. They say they'll wait for their setup, but they do nothing while they wait. Then when it appears, they're unprepared. They fumble entries. They size wrong. They panic when price wiggles. That's not patience. That's neglect. Waiting is not an excuse to stop working. Waiting is the work. Suppose a stock has been consolidating for weeks. The amateur waits by ignoring it, hoping to glance at a breakout one day. The professional studies it daily. He notes the narrowing range, the volume patterns, the way buyers step in at support. By the time the breakout comes, he knows the price levels that matter, how much he's willing to risk, the exact trigger. He doesn't hesitate. Execution takes seconds. Preparation takes hours, days, sometimes weeks. And preparation makes execution possible. Without preparation, execution is guessing. How many times have you taken a trade because it looked good enough without doing the real work? And how often did those trades turn into losses you couldn't explain? That's the price of failing to prepare. Markets reward readiness. They punish sloppiness. Setups appear suddenly if you haven't prepared. You'll miss them or recognize them too late. But if you've been studying quietly, you'll spot them instantly. That's the difference between catching the move early and chasing it after it's run. Waiting without preparation breeds boredom. Boredom breeds impatience. Impatience breeds mistakes. But waiting with preparation keeps your mind engaged. You're refining your plan, rehearsing your response. Waiting becomes training instead of torture. The money comes not from trading more, but from trading better. And trading better comes from preparation. Every great trader spends more time studying than trading. When they look fearless, it's not fearlessness, it's preparation. A soldier doesn't win by shooting at everything that moves. He wins because he trained in advance, because he knows his weapon, because he studied the terrain. By the time battle begins, half the victory is already decided by preparation. Trading is no different. Preparation protects you from surprises. The market is full of traps and false signals. If you haven't prepared, you'll fall into them, but if you've marked your key levels and studied behavior, you'll know when something doesn't add up. You'll know when to step aside. Preparation also means preparing your mind, your risk plan, your expectations. Before entering a trade, you should already know where you'll exit if wrong, where you'll take profits if right, and how much you're willing to risk. That decision is made during waiting, not after entry. When the moment comes, you execute. Most traders fail not because they can't find setups, but because they don't prepare for them. They enter without plan, context, clarity. They act impulsively, and the market punishes them. If they used waiting time wisely, they'd avoid half their mistakes. Preparation builds patience. When you know exactly what your setup looks like, it's easier to refuse weak trades. Clarity makes saying no possible. Preparation strengthens discipline. The more work you put in, the less willing you are to waste it on poor decisions. I've seen traders stare at screens for weeks without preparing. Then a move comes and they jump in blindly, over-leveraged, without a plan. When the market turns, they panic because they didn't prepare an exit. They lose and don't even understand why. Contrast that with the trader who prepared. When the move comes, he knows exactly what to do. Win or lose, he acts according to plan. That's the one who survives. Execution gets the glory, but preparation is where the real work is done. Profits don't pile up during waiting, but they are being built in the discipline, the mistakes avoided, the clarity gained. When execution is fast and clean, it's because preparation was thorough. The market tests you daily. It tests your willingness to wait, to prepare, to hold discipline when nothing is happening. Most fail because they treat waiting as wasted time. If you treat waiting as working time, you pass, and passing keeps you in the game long enough to win. Wealth builds from avoiding unnecessary trades as much as from winning ones. It isn't built only by what you win, but by what you don't lose. Every unnecessary trade you avoid is an act of wealth building. Looking back, the campaigns that made real money weren't built on endless activity. They were built on selectivity, on saying no more often than yes. Restraint is the most profitable skill a trader can learn. How many times have you told yourself you just need to trade more to make more? And how often did that leave you with more losses than gains? The market rewards precision, not effort. Unnecessary trades are like termites eating at your account. One small nibble seems harmless. Over time, the structure collapses. Small stop-outs, minor drawdowns, stacked together can erase gains from your best trades. It's not that you didn't have winners. It's that you buried them under avoidable losers. There is wealth in subtraction. Subtract the poor trades, the half-baked setups, the boredom trades, By cutting them out, you make room for the real ones. Wealth isn't about grabbing every opportunity. It's about filtering until only the best remain. A jeweler doesn't keep every stone. He sorts, discards, rejects until only true gems are left. That's what you must do with your trades.